Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your agriculture update for this Wednesday, the Ides of March, the 15th of March, 2007, just after 3 p.m. I intentionally waited today because I wanted to see what Fed Chair Yellen said after the FOMC monetary policy came out. The grain markets were basically mixed, but to the higher side. You can see the corn, the wheat, the meal, all higher. The dollar index got hit off of what we're going to call a Goldilocks Fed Chair Yellen. She delivered a rate hike, but made it so dovish, the way that she said it, it caused the stocks to rally, the metal markets to pop to the upside, the dollar to fall, and foreign currencies to rally against it. The best of all worlds. She delivers a rate hike, and the market says, okay, she's taking it easy. She said there'll be 3 this year, there won't be more, and that's the mindset. Strange, isn't it? But it's there. And as you can see in the soybeans, you're still looking at a market that's been under pressure. It's into previous support, as I've pointed out to you, and it's got its share of problems. It's between 1080 and 983. The market's down about on a weekly chart overall for the year, from the high of the year, about $1. When we take a look at close-only daily charts, you see how the market's gone from 1052 and a quarter down to a low close today of 998, so down in the neighborhood of 55 cents or so. When we take a look at a daily bar chart, you see how the market's been moving in waves to the downside, and even the swing line's got lower highs, lower lows, hasn't broken that pattern, and prices are trading under both the 18-day average and the 100-day average, and the bearish crossover, and that occurs when a short-term average moves either above or below a longer-term average. It's called a crossover. In this case, it's a downward crossover. The 18 under the 100 did result in new lows for the move. Then I look at where the market might find potential support. And one of the areas I often look at are called Bollinger Bands. And Bollinger Bands are an algorithm designed to keep the market trading within the bands 95% of the time. Now, how the band's set up is important. In this case, there were a rolling band to the downside. You can see the black dashes there and there, and they're rolling, and prices are rolling with them. It's not a sideways band, and that's where you can often get, like here, chop back and forth between the band until it decides to roll out of that one way or the other. So in this particular condition, until the market gets over 1010, the bear market is alive, the bias is down, and momentum is locked in. It's got an embedded reading. When you get the red line crossing over 20, the odds will favor price. Will try to make a run for the 18-day average of closes. Hasn't occurred, so everything bearish. In the meal market, everything bearish. Under the 20 reading with an embedded reading, in other words, both the K and the D lines, the blue and the red lines that make this up, are both going sideways under 20. The battleground, though, isn't the Bollinger Band. It's now the 100-day moving average of closes. If we come to the soybeans, that moving average was way up here, so it's obviously not the battleground. It depends where this appears on the chart. Should the market be able to slip through here, 324.70 is the next support zone. If the market gets over the high of Tuesday, right through here, 331.70 level, you might make a move back to the 334.10 level. But the bears are in control. As the bears are in control in the soybean oil, which has got lower highs, lower lows, under the 18-day average, but oversold. So you have two of the parts of the crush locked in bear trends, which are the meal and the bean, but the soybean oil is just an oversold condition. We then get to the corn, which is also oversold, not embedded. The 100-day average didn't even matter to this market. It just literally paid no attention to it. Instead, it went right for the Bollinger Bands. It's come down. On rallies, it likely will be a resistance point, though, at 367 and a quarter. I could be wrong, and maybe it just slices through it and goes back to the 18-day average eventually. But you play what the percentages are, and that should be what the percentages are. In the Chicago wheat, same thing. 437 3/4 percentages. If you take a look, say that's a first resistance in an oversold market, but it's not trending. You got a higher high and a lower low. That is not a trend. Sugar market, lower highs, lower lows, or are they? They're not any longer. You got higher lows, lower highs. To get the bear trend back on track, the market's got to get through 1810, not return over today's high of 1829, especially on a close, and then you're putting the 1742 as another potential target with an embedded reading. Got it? Let's assume it gets under 1810 and reverts back and gets over today's high. Well, that could be an outside day up. You're still going to be looking at what the embedded reading is, but it's not the chart formation you'd be counting on for that type of trade. When we get to the coffee, you have the embedded reading. That's bearish. You've had a rally where you've lost the swing line bearishness, but this rules the day. So everything here is still in the bear camp. I would say if it rallies back up at all over yesterday's high, you probably lose that embedded reading the way the math would go. I'm not certain, but that would be my guess on it. In the cocoa market, I say you're overbought. You've got to the upper Bollinger Band. Likely time for a correction, but this could end up being a major low in the market, and you have to respect it as such until it's violated because you've got higher lows, higher highs. Admittedly, you're overbought and you've hit an upside target, but you're still in an uptrend. The cotton market did a good job of respecting the 18-day average of closes. Momentum is flat, going nowhere. The swing line, however, has got lower highs and lower lows. You have nothing. You've got upside bias because you're over the 18-day average with the swing line down and flat momentum. In the cattle market, stuck between the upper Bollinger Band and what I call that line in the sand, that 18-day average of closes. Momentum sort of just flat right here. Don't know quite what to do with this type of trade. In the feeder cattle, still in the bull camp, higher lows, higher highs for certain. Overbought as can be into the upper Bollinger Band. Certainly, I would not advise traders to be buying fresh at Bollinger Bands, but until the trend is lost, you're still in an uptrend. In the hog market, still in an uptrend here, but there's a common theme in all these meats. They're overbought. You got higher lows, higher highs. They've gone to the upper Bollinger Band, and again, an overbought condition. Not the best way to come into these markets. So you look at them, you're trying to figure out what do you do, and it's never the easiest thing in the world. Now, I want to remind you that the Lynn Research Group, our staff writes in all this. Now, you don't see these in newsletters anywhere else. It is meant for our trading customers and those of you that get my research. You can choose all these categories, any of them that you want. You can curtail and switch them all that you need to. It all comes by email to you daily and through the early evening and sometimes really early morning. You get it by calling us, going to our website. You'll see a carousel of free offers. Choose it there. Click up here if you wish. You'll get the icon on YouTube. Just click that. The forms will appear. Or under other websites that host us on different areas, it's often they'll put click here in it if they don't pick up the YouTube video, and then a form will appear. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.